Good morning guys, it's me Ali and I warmly welcome all of you in another forecast video of the precious metal gold. Guys, the precious metal gold is, as you can see, the market is trading in between a sideways trading range, and on the higher side the upper boundary of the range is providing resistance around 1954 level, while on the lower side 1928 level is extending support to the precious metal gold. So far, investors are not able to find any solid reason to determine whether there is going to be a bullish trend continuation or whether there is going to be a bearish trend continuation in the market. But anyways, sooner or later, maybe today, because it's a weekend, it's a last working day of this particular week, and the odds are pretty high that sooner or later investors will find a reason to trigger a breakout in this particular range. If that happens, we are going to see if market breaks on the higher side and breaks above 1955 level and gives us a closing of above this particular level, then we can expect a continuation of an upward trend in the market, and the gold prices can surge to first of all, the initial resistance is likely to be found around 1986 level, but it can also drive the further bullish trend until 2016 level. One of the reason why I am discussing about 1986 level is also because of the fact that the market has formed, as you see here, a downward channel. Let me highlight it for you. Market tested it again here, and then market can also test it again on this particular level. So which means that on the higher side, as soon as market break above 1954 level, we are going to see gold prices rising towards 1986 and placing somewhere around 274 pips of movement on the higher side. Well, with that being said, the initial target is going to be 1986, and violation of this can lead the precious metal gold prices further higher until 2017 level. But once again, the violation of 1926 level on the lower side is likely to drive a sharp movement until 1880 level for gold. Guys, if we speak about the 50 pairs exponential moving average, it is suggesting a selling bias in the market. And if we talk about the MACD and the RSI is suggesting selling. So we can say that there are two indicators, technical indicators or technical tools, which are suggesting a selling bias in the market, while there is one technical tool which is suggesting a bullish bias in the market. As we can see on the MACD is crossing above zero level. The histograms are being formed on the higher side, but again, I assure you that these histograms are forming above and below zero because of the neutral sentiment among the market, because of the indecision among the market. As you see, there is a choppy session and investors are trading within a sideways range. So this is one of the reasons why we can't totally rely on MACD for now. Anyways, as soon as market breaks out of this range, there is going to be a trade setup for us, and we can probably capture it. On the fundamentals perspective, we do not have any major economic event. However, the manufacturing PMI figures from Eurozone, UK and USA are likely to be under the spotlight, because they can also drive sort of not a major price action, but some sort of a price action in the market. So guys, that's all for now, and if you like the video, if you like the analysis, do click on the like button and do not forget to subscribe our YouTube channel. And lastly, if you guys have any question regarding forex trading, and if you want any other pair to be analyzed, just feel free to type in the comment section below, and also share this video with your friends. And yeah, that's all. Have a very nice weekend. See you guys next week with more forecast videos. Take care guys. Bye bye.